Is swiping now saving you later? The truth about ZipPay and your credit score. Ever stare longingly at that new gadget or outfit online, only to remember the mountain of bills waiting? Enter ZipPay, the shiny new service promising to split your purchase into bite-sized payments. Sounds too good to be true, right? Well, when it comes to your credit score, things can get a little murky. So, before you swipe your way to instant gratification, let's dissect this whole ZipPay situation. Is it a credit score superhero or villain in disguise? Building blocks of credit. First things first, let's talk credit score basics. This magical number is essentially a report card on your borrowing habits. It tells lenders how responsible you are with debt, influencing everything from loan approvals to interest rates. The higher your score, the better. There are 5 main factors that affect your credit score. Payment history. This is the big kahuna, making up a whopping 35% of your score. On-time payments are your best friend, while late or missed payments send your score plummeting. Credit utilization ratio. This fancy term simply means how much credit you're using compared to your limit. Ideally, you want to keep this ratio below 30%. Maxing out your credit cards or ZipPay limit is a red flag for lenders. Credit mix. Having a healthy mix of credit products, like credit cards and loans, used responsibly, of course, shows you can handle different types of debt. Credit age. The longer your credit history, the better. So, opening new accounts, like ZipPay, can slightly impact your score in the short term. Hard inquiries. Every time you apply for a loan or credit card, a hard inquiry is placed on your credit report, causing a temporary dip in your score. ZipPay typically uses soft inquiries, which have no impact. ZipPay, friend or foe? Alright, now that we're credit score ninjas, let's see where ZipPay fits in. The good news is ZipPay itself doesn't typically report to credit bureaus. This means using ZipPay and making your repayments on time won't directly boost your credit score. However, that doesn't mean it's completely credit score neutral. Here's the catch. Missed payments. If you miss a ZipPay payment, it can be reported to debt collectors. These delinquencies can seriously damage your credit score. Credit report inquiries. While ZipPay uses soft inquiries when you initially apply, some participating retailers might perform hard inquiries when you use ZipPay to check out. These inquiries can slightly lower your score. Temptation to overspend. ZipPay can be a slippery slope. The ease of splitting payments can lead you to overspend, impacting your credit utilization ratio if you're not careful. ZipPay and you, a responsible relationship. So, is ZipPay bad for your credit? Not necessarily, but it depends on how you use it. Here are some tips to make ZipPay your credit score ally. Budget before you buy. Don't get carried away by the convenience. Only use ZipPay for purchases you can genuinely afford within the repayment period. Set up autopay. Life gets busy. Schedule automatic payments to avoid missing a due date. Track your spending. Keep an eye on your ZipPay balance and overall credit utilization. Don't let ZipPay purchases push you over the 30% limit. Consider alternatives. For larger purchases, traditional credit cards might offer better rewards programs or fraud protection. Just remember to use them responsibly. The takeaway. ZipPay can be a handy tool for managing your budget, but it's not a magic solution. Remember, responsible credit habits are key to a healthy score. Use ZipPay wisely, prioritize on-time payments, and you can avoid any credit score pitfalls. With that said, thanks for watching and until next time.